What up, guys? It's November 4th, and we're going to go over rocket companies and my take on today's earnings presentation and earnings numbers, all right? So let's get on with it. But of course, before we do, please hit that like button, hit subscribe, hit notification. If you want to join the Stock Gladiators Discord, the link is right there in the description. I really appreciate your support. Thanks, guys. So let's move on. So I think everybody who follows me knows what Rocket Companies does. It's a mortgage company, mortgage origination and refinancing, and also they got the Rocket Auto, Rocket Solar for the future, Rocket Loans. But this is essentially their business plan, okay, which we walk you through very simply. A customer searches for a home, then they go through the home buying and selling process, then they finance their home through the Rocket Mortgage app, very easy. They do their title company through AmRock, which is very successful at loan title and the way they do business. And they do the mortgage servicing after closing of the loan, meaning they send you your bill and they just service the loan for the rest of its life or until they choose to sell it to an outside vendor. All right, here we have another illustration here of the same process, but of course they're talking here about cross-selling opportunities, which are right here. That's your Rocket Auto, which is still not a monetized process for Rocket companies. They're just helping you find an auto and just helping their customers with the ease of making a hard decision like buying a home and buying a car as easy and as technologically applied as possible. Of course, they're also going to have home solar. That's going to be called Rocket Solar. I'm sure that's going to be released, or that's going to start actually in the first half of 2022, and Rocket Loans as well, which I don't think is in full swing. I think they're doing some testing through it as well, but nothing that's very much monetized there at that point. So that's pretty much the business plan, all right? If you want to reference anything else on Rocket, please look at my prior Instagram video. I think it's still on the Instagram channel. Go check it out. Now, let's go over the numbers here. Of course, they're measuring an EPS, revenue, and forward guidance. EPS, earnings per share, they reported 57 cents per share versus the Wall Street's expectations of 48 cents. That's a solid beat. Good number. Revenues came in at $3.16 billion versus the street's expectation of a little bit under $3. Also a solid beat. The forward guidance was the problem, okay? So they lowered guidance, and that is a significant miss. I think that's not a good thing when a company lowers guidance, because they're telling you essentially, we're not going to do as well as we previously thought. The environment is not as friendly, or the business is not doing as well. They're saying here, the old guide for Q4 2021 was $82 to $87 billion. Now they reduced it by about $7 billion to the range of $75 to $80 billion in closed loan volume right here, CLV, closed loan volume. Of course, they're also talking about net rate lock, which is they're also reducing their guidance on net rate lock, but gain on sale margin is increased, which is a positive. So all good there. I guess not all good there, but gain on sale margin, good there. Right, so of course, what do we do next? We go to the earnings presentation. Of course, we go over the highlights, which are right here. There are Jay Farner's talking about exceeded top-end closed loan volume and gain on sale margin guidance. That's good. Yes, they did. They achieved second consecutive record purchase quarter. That's very positive. It means that the business is still well alive and healthy, and generated net revenue of $3.1 billion versus adjusted revenue of $3.2 billion, or not versus, and the net income, adjusted net income, was $1.1 billion. That refers to free cash flow. So it's a very healthy, profitable business, which is good, and we like investing in those type of companies. He goes here to say, we had an excellent third quarter, blah, blah, blah. We executed mission, high-end guidance, close, blah, 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 blah. Let me see here. We also announced our exciting partnership with Salesforce to provide mortgage as a service. So it's pretty big, I think. That's a pretty big part of this quarter, because Salesforce is lending its Salesforce Financial Cloud, so the Rocket technology can be used by other financial institutions. They addressed this during the conference call, in which analysts were saying, how is a bank that already provides services going to benefit from your technology? And the answer was, the technology is just better. We have better technology, better access to data than most of these banks do. We're talking about credit unions, smaller financial institutions, about 5,000 of them, which will have access to better technology through their Salesforce Financial Cloud by using Rocket Company's technology, of course. All right, so let's move on here to a very important kind of topic here, which is the financial summary. Okay, and I want you to focus essentially right here at the adjusted numbers: revenue, net income, and EBITDA. So revenue, net income, EBITDA. EBITDA, earnings before interest, tax, depreciation, and amortization. One thing that I want you guys to understand is that 2020 was a monster year for rocket companies. So good, in fact, that it makes 2021 look bad by comparison. So think about it this way. In 2020, we were dealing with lockdowns, the Rona, and there were a lot of companies, specifically casinos, tourism, that were demolished. Their stocks, their businesses were demolished by these lockdowns. Rocket companies saw the opposite of that. So what happens? These companies that did bad in 2020 have now really good, favorable comparisons over their 2020 numbers in 2021. So their stock prices are what? Rewarded. They go higher. Now, since we have the opposite problem in which rocket companies killed it in 2020, now the problem is, how do we show growth over such a monster year that was 2020? And that's very hard to do with less housing inventory, right? Less people searching for homes. Such a difficult housing market that we're in which prices are so high, but people can't even leave their homes because where do they go? What do they go do with that money and just buy another overpriced home? People can't do that. So the market is tougher this year than it was last year. But here, the good part of this financial summary is when we compare 2021 to 2019. We see here that they're almost doubling their revenue. They're pretty much over doubling their net income, and their earnings before interest, tax, depreciation, and amortization are over doubled as well. So we see here that these numbers are solid based on normalized periods, okay? And that to me is positive. It shows steady growth over normalized periods, which is what I want to see. But again, the problem here is, and the reason the stock hasn't performed as well, is because of the decline or the deterioration of the earnings from the comparisons of 2020 and on to the future, and also the deterioration of the overall housing market and mortgage market this year and probably into 2022. So we have to deal with that. But at the same time, when is it that we buy rocket companies? Let's go over that real quick. So I want to show you real quick the valuation measures and why I've been buying rocket companies, because I think this is a very, very cheap stock. I dare you to show me a cheaper stock in the market than rocket companies when it comes to its price to earnings and forward multiples. So when we're talking about the price to earnings ratio, the PE ratio, we're talking at a 6. This is dirt cheap. Like steel companies trade at about this same PE metric, and they don't make as much as rocket companies does. Also, the forward PE is going to be higher here, okay? And this is something that is usually a red flag because we want to see the inverse. We want to see the forward earnings being priced cheaper than the current earnings. But in this case, I don't think it matters all that much because this is the market telling us, yeah, there's a decline here in the business. There's a detriment in the future that we see a slowing of growth for the mortgage industry and for rocket companies. Granted, and that is why we talked about the strong year that 2020 was, because it's an impossible comparison. Of course, you're not going to do as well as 2020. So that's the reason why. It's the comparison to 2020. We need to get as far away from that year as possible to show normalized growth, and I think the stock can head higher once we get far enough away from 2020. So moving on, I want to go over the financial highlights here. And here they're talking about the total revenue, $3.1 billion, and adjusted $3.2 billion in Q3 2021. That represents a 96 and 76% growth as compared to Q3 2019. We compare certain revenue and profitability measures to 2019 as we experience a historically low interest rate environment in combination with limited industry capacity during 2020. That's exactly what I'm talking about. That is it right there in a nutshell. They go on to say here that, yeah, we're doing well over 2019 numbers. That's already been established. Okay, now let's go over something else here. when they're continuing here with the highlights, they're talking about this highlight here, which I really like. Q3 2021 represented Rocket Mortgage's strongest purchase closed loan volume in company history. The purchase volume grew 70% over Q3 2020 levels. That is key. That is showing good execution, good performance, because keeping up with any factor of 2020 is extremely tough. And they're saying they grew 70% over those levels. That's great execution by Rocket Company. So good there. They're going over the Salesforce partnership. We went over that as well, the Salesforce partnership. Then we're talking about the client retention rate, 91% over the 12 months ended September 30th, 2021. Very, very strong. It's always been strong since I bought the stock. So very happy with the retention rate of the stock. Amrock is a champ. Rocket Homes, in their referral network program, drove a record 2.3 billion real estate transaction value, representing the value of homes and sold through real estate agent networking on 9,100 real estate transactions. That's gold. That's real good. That's good technology. They continue to talk about here about Rocket Auto, of course. They're doing well there. This is in its early stages and testing of the solar program. So overall, good highlights. These are not bad highlights at all. So when I look at people selling the stock in the after hours after reported, I'm like, what are you doing? Like, really, like, are you really making money here, or are you just making a rash decision to go somewhere else? It just doesn't make sense to me. Another thing that I skipped over here that I really wanted to go over was, as October 31st, 2021, very important, we repurchased 5.7 million shares at an average price of $16.42. Cumulatively, we've returned $94 million to Class A common shareholders in 2021 under the $1 billion share repurchase program authorized in November 2020. So this is key, okay? So remember, in 2020, they told us we have authorization from the board to repurchase up to $1 billion of shares in the market. They have not even used 10% of that $1 billion. So, of course, that is positive because they can still see weakness in the stock and just scoop up shares as they see weakness. So I think the strategy is laid out there perfectly. As you see weakness, you can pick up shares. That's what I'll be doing. Of course, you do your own diligence, your own research. You deal with your own decisions, right, and the consequences of the decisions. But that's what I'll be doing. I'll be mimicking their share repurchase program. When the extreme weakness comes, definitely will be buying some more shares. Also, during the call, they talked about not only share repurchases, but special dividends. I still have the capability to do special dividends, and they're very much focusing on doing it, but in a responsible manner, which I think is smart. So when it comes to this, earnings presentation, nothing much else I want to show here. I know that the cash, the balance sheet looks very healthy. You guys can see right here, balance sheet, the cash and cash equivalents. That's mostly what we care about as investors. Very healthy and is going higher. So their cash position, very well secure, very well funded company, profitable company. That's doing as well as it can under the current environment, okay? So, guys, if you guys have any questions, I think I've gone long enough. Lots to really dissect here, okay? I'm trying to give you the top-down view and as generalized as I can for those of you that own the stock. Feel free to ask me any questions, okay? If I'm too crazy or going all over the place, it's almost midnight here in the West Coast. I'm just trying to get you the information out there. Again, reach out to me, hit that like button. Stock Gladiators Discord is available to any of you guys. Hit the link, join us. Peace out.